Hi everyone, and welcome to this new episode of Furt'Her. So, where we have today Elizaveta Palaznik with us. Thank you very much for joining our podcast, Elizaveta. I have to say that I'm pretty happy to have you today on the podcast because you were part of the beginning of my entrepreneurship journey in the blockchain industry, as you
I'm
were
happy to
one
hear.
of the first speaker of the first event that I organized already 2 years ago for women in blockchain, and you gave this very nice presentation. I had many good feedbacks, so people still remember you. So that's very cool, and I am very happy, of course, that we both are still in the ecosystem after those 2 years and passionate about it. So for everyone who does not know you yet, can you let us know a little bit who are you and what you are doing?
Yes, thank you very much, Lorena. And that's true that it's already 2 years. To be honest, I even forgot about that. But yes, 2 years in this industry can feel way longer than actually the 2 years. That's where we are. But yes, who am I? So I'm Elizaveta Palaznik, like you said. I am, in a nutshell, I'm a financial regulatory consultant, and I help financial entities, but also digital asset service provider to implement the new regulatory framework that we have here in Europe. So it can require a lot of different background. It can require different skills. But what I do is basically translate those regulatory requirements into actually implementation timeline for them. So in order for them to know exactly what needs to be implemented for them to be compliant.
Okay, very nice. That's very a broad view of who you are. And what interests me and also the public is to understand what, when, and why were you interested into that industry? How did it come?
Yes. It's a very, I mean, I think when you ask this question to people in the industry, everyone comes a bit from different background, which is very, very nice to hear, because in not every industry you can find that. If you work typically in finance, you come from a financial background. If you work in law, you come, of course, you have a diploma in law usually. So here you kind of see a mixture of different type of people in it. But mine is, I would say, traditional, but with a focus on different things. So I started my career in Luxembourg, actually, in the traditional financial industry, on a regulatory framework such as MiFID. MiFID is basically for financial instrument area of the financial landscape. So I started my career there, but I didn't really understand. At that time, I was not really understanding what I was doing. I was 22. I started my career there. You just finish your study, you did an internship, so you do what everyone is doing in your surroundings, basically. So I did it for a bit of time, but then I stopped after a couple of years. I quit my job and I wanted to try different things. I lived also in Asia. I worked in the public sector. I used to teach as well at universities. I also started my own startup back 6 years ago as well in terms of private tutoring. I worked with NGOs. So I did. So blockchain came into my life, I would say 4 or 5 years, I think 5 years ago already. And when I started so it's not that long ago, to be honest. And when I started to learn about it, for me, it changed completely my perspective of technology itself. So the more I would learn about it, the more I wanted to learn even more. But at that time, I didn't really know from which angle I could add value in the industry. So I was just learning for myself, and I just amazed how I didn't know this before, because it's still there for quite some time, but no one really talked about it around me. So I just went into this rabbit hole, and I started to learn something I really love to do is learning and teaching, which that's why I also like to teach as well. It's part of also something what I do, and consulting is a way of also teaching. So that's something I really love, grasping a lot of information and to present them in a way that is understandable for the audience, basically. So I started to learn, and then when the regulatory framework started to came into the industry, I would say I started to connect the dots. So in order to doing what I do, it requires different understanding and angles of understanding, such as the technology side. So that helps me to understand the regulation on a deeper level. You need to understand the traditional financial market, because as we want it or not, it's still something it's not the same, of course, but you could feel a parallelism in the setup. And you need to understand the legal part, which I was also working in the regulatory financial industry before. So all this, when it came, I'm like, okay, this is very interesting for me. I think that's an angle I can work with. And so when the market in crypto asset regulation started to be in the drafting, I started to also learn everything I can about it, and decided that that's something I think I can help the industry with, because of this background, because of these different angles and knowledge I acquired through the years. And then from that, so MiCA, this market in crypto assets regulation, is basically part of a digital financial package, along with other regulation that we can discuss later. And what I did is to learn about it and basically help the industry to implement them.
Okay,
In a
well,
nutshell.
yeah, it's very impressive because, as you said, this is something I already heard in the past, is that people willing to enter the industry but doesn't know yet how to position themselves, and yes,
Okay.
what can we bring to that industry, and maybe like find your spot. So it's
Yes,
interesting that it made sense for you when MiCA started to study
exactly.
that, because it was aligned also to your background and connect the dots actually. So it's quite it's interesting to be
Yeah,
inspired
it can be,
also.
because it can be also feeling risky because it's a new industry. But I think the key here is really to go to something that is not the opposite of what you were doing before, because then
Yeah.
it's a bigger risk. So you just divert a little bit from what you were doing and see how the market is reacting, see how you can actually, which problem you can solve. I think that's the biggest challenge, because a lot of people want to do things, which is genuinely positive. However, they're not really solving any problems. So that's and
Mhm.
they try to be in the industry, they try to do things, but the main question I told them, it's okay, but with what you know, with your skills you have, what problem are you solving? And this is valid for any industries, actually.
Indeed, indeed. No, as you said, it's adding value to the
Yeah.
development of that industry. So solving problems is part of it. And but what is interesting as well that I noticed is that you had prior to that an interest for that industry to understand what was it about these emerging technologies that was already there for a few years already, but that was taking more and more space, and getting to understand it before to know what position you wanted to
You
take
want to
in
take,
the
yeah,
industry. So
absolutely. It
it's
always
really,
comes first with an interest.
yes,
I think
yes,
for
yes,
everyone
yes.
is the same, is the interest factor.
With the interest, indeed, it's easier to learn about it and like go to events and attend. Did you attend also a lot of events?
Yes, yes. Actually, I started that way. Also, when I started, so this is a very good question. I started when I was in my learning journey. I wanted to know who were the people involved in the industry. I
Mhm.
wanted really to be involved without being even if I was not necessarily professionally involving in it. So that would give me a grasp also of what are the problems are, because I wanted, like I said, to solve some problems. So I really was paying attention. What were the problem back in the days, and that's how I also, it helps me with the decision of, okay, I will do this because I feel this is something that not a lot of people are specializing themselves in, because of this lack of understanding, like maybe also of the traditional background, lack of the technical knowledge as well. So this is the event part. It's of course it's a big community, but it's overlapping with different industry. Like I say, it's the technology part, the financial
Yeah.
traditional industry as well, and the legal part. So you're kind of in between everything. So, but it's so interesting because, like I said, I'm a person. I love information. I love categorizing information. I love to also use this information to actually make decisions and implement them, and have a positive impact. So that's,
Yeah.
I found my way into this through that angle.
Okay, great. And if we come back to MiCA, then can you tell us a little bit more, and but also in a general overview, So it's at the European level that we understood, but who is taking care of developing that regulation, for which purpose, and how this can help customers?
Yes. So in a nutshell, so MiCA market in crypto assets was initially was supposed to be an addition to MiFID actually, but then they realized when drafting it should be something totally separate because the terms, the technology behind is like we say in Thailand. If people know it in Bangkok, people say same but different. But it's kind of that. So you have an essence that can be, the spirit can be a bit the same, but the foundation are not. So they decided to, in 2020, they decided to draft a new piece of regulatory framework just for that. So, and it came into force, it's coming into force right now this year for certain part of MiCA. It's already this June was entering into application. And then for the digital asset service provider, it's in end of this year. So it's in December. And the purpose is really to regulate third parties that are involved in the industry, and also the token issuers, because you have a lot of different type of actors in the industry. So like I mentioned, you have the service providers. So like in the traditional industry, you can go to your bank. It's maybe a custodian. It's maybe an exchange. It's similar to in the crypto industry. So you also have custodians. You also have exchanges. But imagine you're living in a world where those third parties are not regulated. So this is actually quite crazy to think when you really think about it. And I agree with the fact when people say, yeah, but it's going against the blockchain essence. Absolutely, I totally agree, but we're not regulating blockchain itself. We're regulating third parties who are using maybe your assets, my assets, to do something with it. So like we saw with FTXs, this is not, I would say, a case that's actually so bad that it happens, because then it's removed a lot of credibility from the industry. But it's not the content of what happened, it's actually the context of how things were happening. So it's a person took your asset without any regulation. This person can do anything you want, even though you trust this person, even though you trust the entity. If there is no clear framework put into place to protect the consumer, then the person, at the end of the day, you rely on the on the good faith of the person, which is quite a bit of a bet, I would say. So MiCA basically came into this spirit of regulating those third parties. So those third parties who are the middlemen between you, digital assets, and also the entities who are issuing stable coins, issuing other types of tokens. So this is really the main two areas of MiCA, which, in my opinion, yes, it's regulation itself. If we take the bigger picture, regulation itself goes a bit against the blockchain, because blockchain doesn't require trust, but third parties still require trust. So it's not because a third party uses a certain technology or certain thing that it's still, you can just trust it and close your eyes. That's not true. You know, we're not living in this world yet. So that's why some people have this misconception of, oh, it's regulation, but it's going against the essence. I agree in the fact, but that regulation is for actually the intermediaries. So it's not for protocols that are totally decentralized. If you have a protocol that is totally decentralized without an intervention really of a third parties, then you cannot, there is no regulation for that. But of course you have it for any person involved between some assets that you own, that you have, and that you give them for any reason you want. So yeah, for them, I think it's very necessary to have it in this industry. Otherwise, you cannot really, you're still trusting a third party at the end of the day.
Yeah, indeed, and this is why it makes sense actually, because the ones that are really fully decentralized, people who are advocating for a fully decentralized world, they use directly blockchain protocols to do their things. But the people using exchanges, they know they're not fully centralized. So it's totally normal that those parties in between are also regulated it makes sense. And I think if we are honest with ourselves, we know that it's an intermediary, so it's okay. And this is the reason why some discussion is about full decentralization. Is it
Yes.
really realistic or not? Because there are many things to take into consideration. We will not talk about it today, but it's a
What
topic
does
in
it mean
mind.
actually? Just the meaning. What
Yes.
is decentralization? That's another topic for another podcast.
Yes, indeed, indeed. It's very interesting to have the ownership and everything, the way that the data is stored, not having a central entity and everything, but having the intermediary for investing, it's like indeed the middleman. So it's good to protect the customers. So
Absolutely.
in that sense, MiCA is in favor of protecting the end user, which is the way we should see it instead of seeing it as something against the mindset of the industry. But I
Exactly.
was wondering, like, yes,
Just a last example, if you take even the MiFID and you see the entities that are under MiFID and the entities that are under the scope of MiCA, you see you can see a parallelism in it. But
okay,
instead to have financial instrument that we have under MiFID, you
yeah,
have actually crypto assets under MiCA. So you can see that yes, it's still at the end of the day a middleman, even though what is handled is not a financial instrument, it's just crypto assets, but the behavior is very similar. So of
yeah.
course it's supposed to be regulated.
And I was wondering, like, because MiCA is European regulation, so all exchanges providing services for European users have to apply this, right? Even if they are not registered in Europe.
Exactly. So it's a European regulation for European resident, basically. So if you are based in Switzerland, in London, or let's say in the US, and you serve European residents as part of the services offering you have, then you will need to apply for this license. So it's not because you're just from Europe. So it's really if you're targeting European clients. If you do that, then you will need to have this. You will need to hire people like myself to help
Okay.
you to do this checklist and be ready for this basically license, because some regulation doesn't require a license, just the compliance, I would say, check. But MiCA requires a license for those digital asset service provider. But you have a point that is a bit a debate point, which is for financial entities and authorized credit institutions. For them, actually, they will be able from January, after they notify the competent authority, to offer crypto assets related services without this license. So they will just need to notify, to have some internal checks, of course, be compliant, but they will not need to apply for any license, which can be something we can debate about, because it's okay. Maybe they're financial entities, they already have so many licenses, so many checks they need to go through, but they don't have the knowledge, they don't understand what they are doing, So people from crypto industry might say that. So it's a bit, I'm very curious to see next year how things will evolve, because so far, if you go to a bank, I don't know, BNP, KBC in Belgium, if you go to JP Morgan, if you would like to buy Bitcoin from them, it's usually a very gray area. It's not a lot of bank will allow you to do so. But from January, if they do the compliance check and they have, I think it's 40 days notification to the competent authority, we will be able, as people, to go to those banks and to ask legally, can I buy 20 Bitcoin? And if they decided to put this to add this in their business model, they will be allowed to do so without a license. So this is quite also, I'm very curious to see which bank will decide to openly do it. So next year, I think, might be very interesting to see under that perspective.
Yeah, indeed, it's something to follow, because if banks are entering the market as well, it's
Exactly.
another middleman.
Big
But
thing.
that, sorry?
It's a big thing for the
Yeah,
industry.
indeed, another bull market. It's going to
Yes,
be.
yes, but I'm curious because I know a lot of financial entities. They're already working on things internally, but they're not very, very vocal about it. So for them,
Mhm.
it's just about, okay, we are working internally behind closed doors, and when things explode, then we are ready, you know. So that's the strategy I can see as well, because of the reputational concerns. Usually that's how they feel, but it doesn't change the fact that they would still like to be involved, but they just internally work either on some solutions, or it could be a very good thing for instance, when I work with some digital asset service provider who are already in the market for, let's say, 5-6 years, which is quite a long time, they will be able, for instance, to white label their service to a bank who didn't have the time to develop this internally, which is also quite good for those service providers. So this is also something I'm following, and I'm seeing who is starting to move in the industry, and which big players from the traditional financial market will actually collaborate with the non-traditional, I would say, from the digital asset perspective market.
But,
so this is something also I'm very curious. We can do another part next year to see how things are starting. But this is very interesting to see those, at the end of the day, they are third parties, how they will interact with each other.
That, and also I made a survey the other day on LinkedIn, and for me it's also important to understand not only what the big actors are doing, but also what the consumer are willing and what are they looking for. And this poll was about knowing what are you doing with your Bitcoins? Do you use them as a storage of value or as alternative payments? And 100% was storage of value. And,
okay.
and for me, it was a bit, it's okay, because I know maybe the complexity still today to use it as a payment, but the main intention of Bitcoin in the white paper is a peer-to-peer cash system. So for me, we are not there yet. If we use it for something else, that the vision of what is it for? Yes, and when you speak, and this is why I wanted to make the link, when you speak about the banks, I can see it coming that people will like use the possibility to buy crypto asset through a bank for storage of value again, because they will not own it and maybe not pay with it through the bank. I don't know if that would be the willingness of the customer. So I'm thinking, okay, are we going in that direction where at the end it will not be the first use is it was intended to create this decentralized peer-to-peer cash system? It's becoming
yes, but that's actually the whole essence of it, exactly. And I think I thought, because it's more philosophical approach and thinking. And I noticed that as well. Why we go back again? Because the whole purpose of the peer-to-peer of blockchain itself, because Bitcoin is the first use case of blockchain, it's to remove this middleman. So again, if there is a middleman, it makes sense it's regulated. But the whole purpose of it is not to have any middleman, which is the beauty of it. So why again we have third parties? And I think that comes from the mentality and how we are reluctant to trust no one, basically, because here just trust the math, you trust the system. You don't need to rely your trust on anyone else. And this is something I think psychologically, in terms of mentality, we are not there yet. I think that's one reason. And the second reason is also the adoption. I think when you have trusted financial entities who are also somehow using it or offering services, who are putting their feet in that door, it will signal trust for people also. This is actually, even though it's still third parties, it will somehow signal, okay, they're also part of it. That's like a check psychologically for people. So that's, I think, something that's that can also would be the first step to then understand, actually it's a peer-to-peer system. Because in order for people to understand that the peer-to-peer has advantages, you need to be in a situation where your current system, where you actually feel that there is a middleman that is detrimental to you. So if you feel that the middleman takes too much money of you, if you think that the middleman is blocking you from acting, if you think the middleman is not doing things in your advantage, then you will start to think, I want to remove this middleman. You know what I mean?
You will
consider,
something else.
okay, I don't want it. But so far in Europe, in terms of financial mentality, we are not there yet in terms of crisis. So it's in some part of the world, if your account is constantly blocked, or you cannot make any payment to your family, or you have a lot of inflation in your country and you cannot trust the government, you cannot trust your financial system, then it makes sense to be on a peer-to-peer mindset. But in Europe, we have the luxury of being in so far, I mean, maybe it's, I don't know in which direction it will go, then it's another topic, but so far people don't have any issues yet. They're not having their bank accounts like in some countries right now. If you're from certain countries, you cannot participate in any financial transactions. If you have a large sums of money, you cannot even transfer. You have so many checks, you have so many proof that you need to give, which is, by the way, a good thing also for money laundering, etc. But you're less free. So if you have a lot of assets, if you come from a country where you have a lot of inflation, if you come from a country where you cannot interact with other countries financially because you come from that specific country, then it makes sense, you know. But if you live in a nice world where you don't transact above X amount, or you come from a country where you don't have instability, then you don't see the necessity to do it. And that's why it's very difficult to convince, because people, like, again, in order to embrace a solution, you need to have a problem. People so far, they don't have a problem with the traditional finance.
And it's very comfortable. It takes something to get you out of your comfort, because on top of it, it's an industry that is in its early stage in terms of user interfaces and everything. So it's not the most friendly application, decentralized application and everything. So it doesn't help to have people try out, understand, and move on with an alternative solution.
It's not user friendly.
No, and it's true that if people will change if there is an added value to them, and but the thing also, what I realized is that we're in this era where everything is made for us, and always companies are trying to build something easier for us every time, but to gain and to earn this easiness, we have to adopt and approve every single things when we accept all those terms and conditions everywhere. So we give away a lot of rights. But this is the world where we live in for the moment, that we have this easiness being created in exchange of a lot of terms and conditions. That's something that if we want to earn something else, more ownership and more independence and everything, it requires that we take all what we signed for on our own. And this is something that it's a change in responsibilities, which requires some efforts, let's be honest, and some responsibility. So this is not something like, if you ask people that you have been taught for years, like, we will make your life easier, you just have to accept all of terms and conditions, and then you come with something saying, okay, here is an industry which is interesting, you can store data differently, you can have a decentralized finance world, but you have to take your own responsibility. What?
Yeah, exactly. It's that's very true. It's the same example. It's like, for this industry, I like to give an example of, you live in your apartment, you have your key of your apartment, and you go on vacation. So do you trust yourself enough to keep your key from your apartment with you, or you would like to give it maybe to a neighbor, to a third party again? So of course, this neighbor, if he does, let's say, something and go to your apartment and rent it or whatever, if he's not in ideal world with this metaphor, he needs to have some regulation before, some accord between two people. So, okay, please don't rent it out, please, okay. But that means that you're not trusting yourself enough. And some people, they're not trusting themselves enough. So it's not a judgment, or it's not something, it's just, for some people, they prefer to handle this by themselves. Some people, they prefer to delegate it. So this is the whole spirit of also, we can go in that spirit and use this metaphor in the crypto peer-to-peer industry without the middleman. That's why these third parties are still your neighbor, who take your key, basically.
Yes,
So
indeed.
you're not really changing from the banking system.
No.
It's just what you use is not a financial instrument. It's or money is a digital asset, but you still have this middleman. But if we go to this first layer of why Bitcoin exists, is really peer-to-peer. Is saying, I don't want to give my key to my neighbor when I go on vacation. I trust myself enough to take care of it, you know. And I think people should be also allowed to have this thinking, you know, because in the system we live in, when you think about it, if someone, you just, let's say, I don't know, you're not coming from this world and you come here and you realize that the money that you have is always in third parties, and there is always a third party involved. When you think about it, it's quite crazy when you really think about the essence and the reasoning behind, and you're not really allowed to own what is your own,
Yes.
you
Yeah,
know.
indeed.
So
Yeah.
that's why, yes, I agree with the why Bitcoin came, and I think I explained that even during my presentation 2 years ago. And it's really because of some challenge that were happening, because people didn't trust the financial system. People see also data privacy also as an issue. So they're like, okay, I want to have the same behavior I have with my cash. So if I give you right now to you 50 euros, I want just to give you 50 euros. Why so many people need to be involved in this transaction? And they just see that a lot more and more things were going digitally. And they're like, okay, how we can actually create this behavior we have in person, how we can create it online without a third party, because that's the thing. It's like with Airbnb, for instance, you have a third party. With Uber, you have a third party. So it's really removed. So blockchain actually removed the need, the necessity to trust a third party and just to trust the algorithm, basically, in a nutshell, to make it very easy, which is, it can be applied to the financial system, could be applied with Bitcoin, and it can be applied to any different supply chain mechanism or anything. But
data, different type of data,
yes,
digital identity, and
a lot of people, and I saw a lot of people misconfuse the Bitcoin itself mentality and the essence with the crypto asset service providers, which is still a third party at the end of the day. But they use the content and the essence of crypto to be, again, the middleman. So that's why you have the fully decentralized, where actually there is technically, in theory, no middleman, and that's why the middleman is still regulated. So yeah, it's the essence is always, and I think also the lack of understanding from people, and the knowledge of actually what is what, and putting a lot of Bitcoin and crypto and the crypto asset service provider is all the same. You know, it's all in blockchain. Everything is a synonym, you know, which is actually it's not. So yeah, we'll see what the future holds in the industry. But I think to gain trust, unfortunately, that's very funny, because in order to gain trust into something that doesn't require trust, it needs to still go to the steps of the traditional players, because that's how in our brain it's working, because that's how we work so far. So I think it makes no sense when you really lay this down, because we don't need to trust, in the end of the day, blockchain. But in our mind, we still need to trust something in order to make it trustworthy. So that's what is happening right now, I think, with the third parties in this industry that came, and also the traditional financial players that will also be part of it. When they will start to be more present and more involved in it, people will see it as like I said before, as a good sign.
It's like if they give the green light,
the green light, and people, okay, and now I can trust it. And then maybe they will really realize what was actually this about from the beginning, like you say, peer-to-peer system. So yes, indeed, it's a lot of a philosophy behind, a lot of lack of understanding in terms of, I think in the other issue, I think, is a lack of understanding and teaching at school of the technology itself, even how we code, how the internet is working. We don't really learn this. A lack of financial as well education, because in order to understand why a peer-to-peer financial system is interesting for us, you need to understand those two behind. So you need to understand the traditional financial system, how it works, which a lot of people don't, and you need to understand a little bit how technology works. When you understand those two, then the next step makes sense. But right now we have not even taught how money works, or how really all the
No.
IT systems are working. And this is very bad, I think, for the new
Indeed.
generation. You can learn only by curiosity, you know.
Yeah, indeed, indeed. I'm seeing that we're running out of time.
Yes, yes, I
This
do
is
see.
very passionate
We can discuss it for hours.
discussion. So we went through philosophy and the origin of this. That's amazing. Elizaveta, do you have anything you would like to share with us? That any project that upcoming activities that you would like to share?
Well, so far, I'm working helping financial entities and digital asset service provider to be actually compliant with all those regulations. So if I can help with anything, I'm very good at this. And I also teach at universities as well in different fields. So this is something I love doing. I love transmitting my knowledge and make sure, yes, everyone have a better understanding of how this world works.
Perfect. Well, thank you very much, Elizaveta. That was really a wonderful discussion. I loved it. It was to go deeper into the